$3,849 per month. That is the average rent over the past 30 days for a 3-bedroom apartment in Toronto, which happens to be down 15% since this time last year. And what about on the other side of the country in Vancouver? Rents are dropping even quicker, with a 2-bedroom apartment averaging $3,648 per month, which is down 14% over rent prices from last year. So what's going on here? Why is rent dropping fast across most Canadian markets, and is this beneficial for everyday Canadians? Let's talk about it. Everyone knows that Canada has one of the most expensive and unaffordable real estate markets on the planet. And with expensive real estate generally follows high rents to cover large mortgage payments owed on the properties. And over the past couple of years, rent prices have surged in major Canadian cities, making life highly unaffordable for millions of Canadians and almost impossible to actually start saving towards a down payment to hopefully one day get out of the rental market. But as we just covered, we're now starting to see rents come down quite significantly, actually, in many major metros across Canada, like Vancouver, Toronto, Calgary, and even Montreal.
Sky-high rents in Vancouver seem to be dropping, although they are still the highest in the country.
Well, for the first time since the pandemic, national rental prices seem to be going down.
So that you have a more visual view of how this trend is actually spreading across Canada, here's a map highlighting most large markets across the nation, with most values for 1, 2, and 3-bedroom units coming down quite a bit from all-time highs. Now, what's probably confusing in all of this is that for months and even years, the narrative around Canadian real estate in general has been that we haven't had enough supply in the market, both for buyers and renters as well, which has driven up the price of homes and rental properties alike, along with rents in parallel, of course. So why are things suddenly changing? Are we actually seeing supply increase or even demand decreasing?
It's not a significant drop, 1.2% in October across the country, but it's the first time since July 2021.
This might actually come as a surprise to some, but in 2024, the housing supply actually increased quite substantially in many large cities across Canada. But the particularity here is that the supply mainly increased in one dimension of property types, and that dimension only. If you've ever driven around Toronto, Vancouver, Calgary, you know what I'm talking about here. Purpose-built condos and apartment complexes that have sprouted up like weeds with the sole goal of housing newcomers to the country. Let's just call it how it is. These apartment towers and low-rises have been purpose-built for renters, which over the past couple of years have mainly been newcomers to Canada. And with millions of people having entered Canada over these past 5 years, there would otherwise never have been a need to build so many units so rapidly. And that's an important detail to mention. These are units being built, not homes, as many people often confuse when speaking about the Canadian housing crisis, as developers build new towers with the intention of renting out to tenants only, really. So many of these constructions have never and will never be considered homes, as they're owned and operated by large companies and even management trusts in some cases. So let's unpack this statement a little bit more, as it ties into a concept I've spoken about dozens of times on this channel. Most data that we're presented with in the news and from the CMHC, for example, that we see in headlines, groups all forms of housing starts together to form a specific angle or narrative about the entire Canadian real estate market. But to paint a clearer picture of what's truly unfolding in the country, we need to entirely separate multifamily properties from the mix of single-family homes, detached homes, and even condos. In Toronto alone in 2024, more than 5,000 apartments were built and released into the rental market, which very much constitutes an increase in supply for this one type of property. All right, now since most of you watching probably haven't ever built a building, I'll give you a 30-second crash course on how construction financing works, which is a very important element to grasp in what we're discussing. So when a developer approaches a lender, generally a bank, they need to present the lender with a business plan. In the case of a construction project, all the building costs, the permits, and most importantly, an estimate of what the building will be worth after it's completed, which in the world of commercial real estate is highly tied to the future income that the building will be bringing in through form of rents. This means that for developers looking to purpose build apartment complexes with the goal of securing a final stabilized mortgage loan that is large enough to pay off all of the bridge construction financing, budgets need to be met, leasing targets need to be hit, and income needs to be flowing. But with a couple thousand units coming to market in and around the same time, especially for, let's say, one single property that has, say, 200 to 300 units in the building, this creates competition that could drive down prices like we're seeing right now, just to at least fill up the units to secure that final financing. And so it needs to be considered that while the increased supply has overtaken many Canadian markets quite quickly, we need to also take a couple of steps back to understand that a 200 or 300 unit building, heck, even smaller buildings in the sub 15 unit range, let's say, often take years of planning, due diligence, and permitting before even starting construction, which right now could easily bring us back to pre-COVID times or near the start of COVID, when developers commenced these large projects in a lower interest rate environment. Alright, so more purpose-built apartment complexes coming online all at once are definitely one side of the story. But what about these famous condo complexes that aren't exactly targeted towards renters when they are built and pre-sold, although that often becomes their fate nonetheless? I am talking here about the record 30+ thousand condos that were built in Toronto alone and released to market in 2024, which with the increase in interest rates over the past 12 months before, yes, they have started coming down again, well, thousands of completed condos were sitting vacant across the country, with Toronto being a major hub for this particular issue, where instead of just sitting vacant and absorbing those carrying costs, many developers chose to rent out these condos to tenants instead. So not only have we seen the actual transaction volume and value of condos in the GTA drop substantially since early 2022, but we're also seeing many of these condos having been purchased by investors looking to rent out the condos with the goal of turning a profit, essentially turning them into rental properties, which is a problem that many people, including the federal government, have called out. In fact, roughly 65% of condos in the Greater Toronto area that are below 600 square feet in size have been purchased with the sole goal of renting out to tenants by 2022, which for a while was actually a decent way to make some quick cash, where thousands of investors bought up condos at a pre-sale price, speculating on that upwards price movement and then selling once the condo came to completion. Seriously, if you remember the frenzy that was the real estate market during the pandemic, for a while, it was nearly impossible to lose money on a deal here in Canada, as the prices were increasing just so rapidly due to massive competition and bidding wars. But over the past couple of years, the whole construction and rental property landscapes have changed quite a bit in a way that has completely modified the game, as costs to build have increased, costs to borrow have increased, and just overall demand for property has significantly slowed down, meaning a lot of investments that weren't fundamentally sound investments to begin with, other than that price speculation, have turned sour quite quickly for many investors. So although Toronto isn't all of Canada, of course, it's interesting to see what's unfolding in Canada's largest metro area, where condos listed for sale are at an all-time high, despite sales being at a record low in decades. It's truly the perfect storm for prices and rents to come down swiftly like we're seeing. Over the past couple of years, Canada's population has skyrocketed. If you've been in the country, then you've definitely seen this unfold. And with new residents in the country, the need for increased housing has been one of the paramount issues at the forefront of politics.
Today, we're announcing that we will reduce the number of immigrants we bring in over the next 3 years, which will result in a pause in the population growth over the next 2 years.
Right, so this meant that for a period of time, population growth in most Canadian cities was outpacing the amount of units on the rental market that were available, which is why with increased competition for each of those units, we saw an insane price spike and even Facebook Marketplace listings like this one, renting out closet space. And that was the reality from 2020 to mid-24, but in the face of what most Canadians considered a real problem and the leader of the opposition grilling the Liberal government in place on their loose immigration policy leading to issues like these, the federal government chose to scale back on the amount of new people it was letting across the border, which is the first step towards what we're now experiencing. So yeah, supply and demand. There is more supply having come to the market in parallel to less demand for said units. And following the laws of economics, this means price will have no choice but to decline, at least temporarily, in markets that have had high concentrations of new residents and international students. Seemingly, the markets that have been more insulated from rent decreases and violent fluctuations over the past year have been secondary markets that also have less population volume and economies that are backed by certain industries. Think of Ottawa, Gatineau, Niagara Falls, Laval, and other markets with less volume of foreign nationals. So let me know down in the comments, are you a renter, and if so, in which area of the country? Have you seen rents decline, or are prices still out of control? If you enjoyed today's video, please make sure to leave it a like, subscribe to the channel, and consider supporting my channel as well by utilizing my affiliate links down below in this video's description and pinned comment to get some free money when signing up for an investment account with Moomoo, or you can get 25 bucks worth of free Bitcoin on Newton. Thanks a lot for watching. Check out one of these two videos right here, and I'll see you in the next one.